Good day, traders. This is Richard. Good day, traders. This is Richard. It's 8 a.m. Pacific time, and I am in Nevada. I'm in the process of structuring our weekend research, actual versus forecast process. I'm looking at all the instruments that we forecast last week on Saturday to see how we've done, because it's Wednesday and we should have done pretty well. So let's see how we've done. This silver has moved up considerably over the last 4 days. I'm going to draw another ABCD, A, B, C, D, and then one more. It's very bullish. A, that one's so steep it's hard to. So here's the last inflection. A, B, C, D. So that's where it's going. Going up to $21. That started out down here about 2 weeks ago at $18 and penny, right over here. So let's draw a circle around that and make sure that is the low. And to do that, we've got to turn off the snap function, because every time you do anything besides draw geometry, you want the snap function off. And when you draw geometry, you want the snap function on. Now let's see if this is the low. We're looking at a 4-hour chart here. See how price worked its way down over the last several days. Over the last several days, silver has moved up considerably from 18. It's $5,000 a point. So when it moves from 18 to 19, that's 5,000. And when it moved from 19 to 20, another 5,000. Now it wants to go to 21, another 5,000. So let's take a look at it. Now I've got to stretch it out so we can see the detail. Now this label here needs to be over here on this grouping of candles, because these are mostly 4-hour charts. This needs to be a 4-hour chart. So let's change it from a 15-minute to a 4-hour, and then blow it back up again and go back and look at it so you can see we've been dealing with it. And I think that I drew this on the long low. Here's the actual low. Now I'm making my circle start there at the very bottom, and then the circle itself needs to be within the wick. Now, that's my way of finding a low, my left-hand trade, a buy signal that we recognized from doing this kind of geometry that we did over here. We did it down, from here down, and we could tell it was going down by just using this geometry. And here's some more. And there's 3 or 4 more ABCDs that would get us down to that point right there. This would be one of the last ones. I'd say this one here might be the last one that would have indicated that we wanted to get down to that level. And this is the high. Now this is the time we want the snap function on, so we can snap right on to the bar and price of the high. That's the high. That's the B low. And here's the C. And there's the ultimate low down there. We never got down to 17,965. We only got down to 1801, which was pretty close. So we knew all along that this thing was going to come down. There's another one in here, another ABCD, A, B, C, D, and see how it comes down to there. And then we drew this one here, and we could probably go clear up to there. But that wouldn't be quite right, because this would need to be over here, and this would need to be up there. And then we draw from this, and that inflection point is off. That should be over there. And then we start right there and go down to that low and up to this high. That's where we get our $17.95 target. So you don't always reach the targets, but you get real close. And then when we made this low right here, well, I probably should, no, that's okay. Just that circle there. Now I can start drawing up. We got a reversal. This is a reversal. We came all the way down to there and went all the way back up to there and down to there and up to there and down to there. Then we started all over. A, B, C, D. And then we went really up. A, B, C, D. Now they're all not all precise, but they're real. That is history. And now our business is to analyze the history, to identify the present, and to forecast the future so that we can take a trade and make some money. And we had 17 chances to do this over the past 2 weeks. Let's see how many days we got here since that low. I'm guessing it's between 2 and 3 weeks. Here's the low. That was on July 15th, and today is August 10th, right here, August 10th. Now, let's see if I can turn on my markers and see the trades we've made. They're turned on, and I've made a lot of trades in here. There's a bunch right there. I made some down here, but they're not visible. I don't know why. There's some up there that are visible. Here's some more over here. So I've traded the heck out of this thing, and I've made some money in silver. But I haven't made near the money that I could have made because of, well, me. Because I have a tendency not to pay attention to my charts as frequently as I should when I'm really interested in a product. I knew silver was at a bottom when it got down here. I believed that it would take off, it would take flight from here, and it did. But I missed the train on 3 or 4 opportunities. Now, like I said, I've made some money, but I could have made more like 10 times that money with the same investment if I'd stayed with it every day about 6 times. Now, what do I mean by 6 times? Well, there's about 6 times a day that you should look at your market to see what is happening. Okay, one of them is shortly after the open. The open in California and Nevada and Washington and Oregon and is Southern Nevada is Pacific time, and the market opens at 3 p.m. So you need to look at the market between 3 and 4 p.m. You don't want to. You probably don't want to plan on doing much. Not necessarily take a trade. You might, but you want to wait for it to trade until about 7 at 9. So you want to look at it at, let's say, between 3 and 4, and then between 7 and 8 p.m. to see if you want to put on a standing order to take a trade. And then I go to sleep at sometime between 9 and 10 because I wake up at 4:15. And so you need to look at it between 4 and 5 in the morning. And you need to look at it again between 8 and 9. And then this is where I fail. I don't do much after 9 in the morning. I do a couple hours in the evening, and I do 3, 4 hours in the morning sometimes only 2. Should do about 4. So I should look at it at 5, 7, and 9 in the morning. And I seldom look at it at 9 or 11 because I should look at it at 11 and then again, and then no more until 3 when it opens again. Now, this is my telling you what I'm good at and what I'm, well, not as good as I want to be at. Focus, energy, drive, stamina. Those 4 words summarize what a trader needs to do to be successful in the business. You need to look at the market. How many times did I say? Okay, the open, hour, and then 4 hours later, about 7, see 3 and 4 is 7, and 4, 11. Well, I'm asleep at 11, so I don't look at that midnight thing. I need a partner that's maybe in Europe, so because it's pretty, or Asia, actually Asia. I need somebody in Asia to help me manage the trades when I sleep. Then I wake up at 4:15 in the morning, and I want to look at the market between 4 and 5 and see what I want to do then. Then again at 7. So when you're looking at these 4-hour charts, there are 6 4-hour charts per day. Let's spread this out and look at that. When I say spread it out, I want to be able to see my candles. And I'm spreading it out now to where you can see them. Now I'm looking at about 2 weeks. How many days is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Squinch that 10 in there so we see the whole day. So you want to be able to look at 10 days of 4-hour charts. Remember what I said. There are 6 per day. And so you really want to look at your charts that you're trading off of, because we do our forecasting on a 4-hour chart. And I have a really good success rate for doing the work that needs to be done on Saturday to figure out what's going to happen next week. But I don't have a very good success rate of paying attention all week long on every 4-hour interval. Now, it doesn't have to be right at the changeover, and the changeovers are 3 a.m., 7 a.m., 11 a.m., and then 4 hours later is 3 p.m., then 7 p.m., and then 11 p.m., and then 3 a.m., and then 7 a.m., and then 11 a.m., and 3 p.m., and 7 p.m. So that is the cycle, the weekly cycle and the daily cycle. And what the weekly, of course, consists of 7 days of doing this, not just 5. It's not a 5. This business is not a 5-day work week. This is a 24-hour business. And now you can still get your sleep, and you can still get your eat, and you can still get your rec. Everybody needs recreation. Everybody needs sleep. Everybody needs to exercise, and everybody needs to eat, sleep, exercise, and focus. So at what times a day do you need to focus? Those 6 hours I've mentioned 7 times already. They should be indelibly etched into your cranium now on what time of day you need to look over the market that you're wanting to trade. Because if I go back 2 weeks to where this low was formed on silver, right over here, I remember trading this. I don't know why there's no markers in here. Possibly because I did the trading on NinjaTrader 7, not NinjaTrader 8, when I was over here. And this is NinjaTrader 8. I've begun using NinjaTrader 8 more frequently than I use NinjaTrader 7 because it has a little bit more sophistication. But I'm not as well acquainted with it, and that's all my problem. Your focus should be on NinjaTrader 8, and your focus should be at these times that I suggested that you pay attention to the market. You only have to pay attention for 5 minutes at these times. And the couple of times where you might not be available because you're sleeping is you need to find a partner in some other part of the world to look at it for you during that time. And I have partners in Switzerland and Thailand. So I've got Asia and I've got Europe covered. So I need to do a better job in communicating with my colleagues so that we can make more money together. But you can take money out of the market at any one of these times a day. But I've mentioned before in my talks that the best time of day to consistently trade off of a 15-minute chart now, not a 4-hour chart, is between 5 and 7 a.m. And that's what I've been doing for 10 years. Trading between 5 and 7, take a little bit out of the market every day. And then what I need to do is become a better swing trader. I need to manage my swing trades a lot better than I do. I'm not getting any younger, so I'm seriously searching for a trading partner that can help me achieve the objectives I know how to reach if I just had the breadth of arms to go around that big tree. And the tree I want to put my arms around is just a little bit bigger than me. And we're talking about a redwood tree here. And I can get my arms around an elm tree, a young elm tree, not an old elm tree. But The idea is to walk up to this tree that's standing there like a rock, like a tree, and you reach out your arms and put them around the tree to where you can touch your fingers. If you can touch your fingers, you can manage it. You can manage that sphere of influence, that circle around your body that you can control. You can control that area. That's your space. That's your arm's reach. Now you're not using your arms necessarily except moving your mouse around, but you are looking at the thing with that type of physical phenomenon. You're analyzing what you can analyze. You can't analyze everything. There's not enough time in a day. There's not enough focus. There's not enough stamina. There's not enough energy to do it all. So you got to limit yourself to what's important. And I've just gone over what's important. Now, I watch between 6 and 8 instruments. Those instruments are crude oil, euro currency, gold, the treasury bond, silver, natural gas, gasoline, the S&P 500, and the NASDAQ. Those are what I watch. And they're right here. They're all right here. I just named them. Here's crude oil in the upper left. Here's the euro. Here's gold. Then down here on the second row, natural gas, dollar index, silver. There's 2 silvers. This should probably be an S&P. And then down on the bottom row, I've got my gasoline, my treasury, and here's another S&P, which would probably be the NASDAQ. This should probably be the NASDAQ here. And then over here, this should be my coffee. I haven't mentioned coffee before, because I missed it, but it's important. It's one of my 8. I think I have a dozen here. Coffee, KC. So I got 1, 2, 3. There should be a 4th one here. That should be out of there. 5, 6, 7, 8, 9, 10, 11, 12. So you can only handle about 6 during a week. So you need to pick the 6 you're going to deal with this week and leave the other 4 alone and just concentrate on those 6 each week. You might change them on the weekend by looking at them and you say, oh, this looks really good. I've been waiting for this to mature and to be in a tradable entity. Like I'm going to be starting to trade coffee in October, November, because it has a tendency to start at cycle then. It gets really low and starts up. It's what it's been doing for 10 or 15 or 30 years. So you don't need to trade coffee all year long. You need to trade it in November through March and leave it alone. Thank you very much for your attention. I hope this has been interesting, educational, and invigorating. And what I started out to talk about are my actual versus forecast. That's what I was working on, and I wanted to make a little video about them, and I didn't do that. I talked about trading. I just erased one of my things here that I'm going to have to get back. But I'm trying to make all of this visible for you. We want to be able to look at our actual versus forecast every day a little bit to see how we're doing. So I've done that, and I'm ready to do the actual versus forecast on Friday, 2 days from now. These 12 instruments, because it's what I do, and we never forecast all 12 instruments in a week. We always just do about 8. 6, actually. We do about 6. But we have a dozen to pick from. Thank you very much for your attention. Richard Rube, signing off. You can reach me at zoomroomradio@gmail.com or visit swissft.com. Thank you for your attention. Good day, traders. This is Richard.